Asian stocks flatlined on Wednesday as Sino-US trade talks approached the weekend deadline with little sign of progress, while a tightening of the UK election race knocked the pound. Investors are beginning to suspect that even if U.S. tariffs due to take effect on Sunday are delayed, it may be 2020 before Washington and Beijing can agree on broader rapprochement. In the absence of detailed trade news, focus moves to the U.S. Fed's outlook for the economy, due at 2000 Greenwich Mean Time, along with an expectation interest rates will be held steady and Thursday's British election. The U.S. Federal Reserve holds its last policy meeting of 2019 on Wednesday, having completed a year-long U-turn that saw it abandon a tightening cycle and lower borrowing costs 3 times in response to the global trade war. The policy shift has slashed officials' forecast for the U.S. Central Bank's benchmark overnight lending rate over 2020 to a level half what it was when Fed Chairman Jerome Powell took the reins in February 2018. The Fed is expected to leave its federal funds rate unchanged at a level between 1.5 and 1.75% when it ends a 2-day policy meeting on Wednesday, and reiterate that it will likely remain at that level through much, if not all, of 2020, a presidential election year. MSCI's broadest index of Asia-Pacific shares outside Japan barely budged. Japan's Nikkei ticked lower after White House trade advisor Peter Navarro said a decision on the December 15 tariffs would come soon, also knocking modest early gains off Australia's S&P/ASX 200. The biggest mover of the morning was the British pound, which shed 0.3% to hit $1.3128 after a closely watched YouGov poll showed the ruling Conservatives tracking toward a much slimmer majority than forecast a fortnight ago. The pound had climbed to an 8-month high overnight before the survey, as investors priced in a comfortable Conservative victory and expected it could end years of uncertainty over Britain's exit from the European Union. YouGov's research director, however, said the results showed a hung parliament was possible. On the trade front, officials from Canada, Mexico, and the United States signed a fresh overhaul of the quarter-century-old North American Trade Pact, but there were few hints of progress on a deal between the globe's 2 largest economies. A Wall Street Journal report that said U.S. and Chinese officials were preparing for a delay to the December 15th round of tariffs knocked bonds, but did not shift stocks, since it suggested no resolution to the trade conflict. White House economic advisor Larry Kudlow later said that no decision had been reached regarding the tariffs, which will automatically take effect unless they are reversed or suspended. The Dow Jones Industrial Average and the S&P 500 each fell 0.1%, while the Nasdaq dropped by a little less. The yield on benchmark 10-year Treasury notes, which moves inversely to price, last stood a little higher at 1.8399%. U.S. inflation data, due at 13:30 GMT, expected to hold steady, may further decrease the likelihood of 2020 rate cuts should it surprise on the upside. The Fed is widely expected to hold rates steady at the conclusion of Wednesday's policy meeting, with investors instead focused on any change to the central bank's view of the economy and its 2% growth forecast for the next year. Elsewhere in currencies, the dollar slipped against the euro overnight as German economic sentiment sharply rose after an unexpected rebound in October exports. U.S. crude dipped 0.25% to $59.09 a barrel, while gold was slightly lower at $1,463.52 per ounce. That's all for today. Thank you for watching. Subscribe to our channel to track the market pulse and get the latest economic data.